Good afternoon, everybody. It's about 2:30. Today is December 4th, Monday. Hope you guys all had a good day. It was actually a very interesting day today. The market stocks, especially the NASDAQ, went down all the way almost 300 points for the day, but ended up at about 120 points negative, about 0.8%. If you look at this on the daily chart, um, did a very nice move up on the channel as I had expected. So started off negative 150 points, went down all the way negative 300 points. And then I had done a little bit of a trade when it was over here. Look at this channel that I had drawn. And I said, I'm going to ride it all the way through, rode it till here, gave up. And then it kind of meandered all the way to make a negative 190%. But let's take a little bit of a step back to the weekly chart. Still in the step of the cup and handle pattern, still going strong. This is healthy to a large extent, although the whiplash might be seeming a little bit challenging, but still, NASDAQ still in good territory on the daily chart as well. As you can see, this was not a great candle, testing, little bit of a touchdown back into the levels that I had set for it. And now it seems to be back again into the next stage of its, hopefully starts moving up here in a little bit, maybe touches a little bit more in the next couple of days. It should bounce off of here. This is what it did today. So I'm hoping it goes back up again. That was the NASDAQ. The S&P 500 also was down roughly about 24 points, not as much, 0.5%. Good candle. Look at that. It actually ended up a little bit higher than actually where it started. And I was expecting a 45, 50 point move down. And the Dow Jones Industrial Average also down roughly about 41 points. So still the strongest of the three indices, down only about a 1.1%. The interesting point is if you look at one of the indices that I follow that I don't, Russell 2000 index, after having done a very good head and shoulders. So let me draw that out for you. This is the small cap index, the Russell 2000. This is the head. And let's move hopefully I can grab it. I don't think I can grab it. So I'm going to go and say, let me move this back. Okay, so this is the head. I'm going to move the head a little bit to the left over here. This is the left shoulder. Then let me draw the head. God, man, it's so hard to be able to pull this information through. There you go. This is the head. And then let's pull the right shoulder. And so it's done a good move off of this point so far. I'm able to grab it. So let me see if I can grab it now. No, I can't. This is the way to do it. Move to the all, see where I can see it, grab it from the top. This is painful, isn't it? On the weekly chart. Okay, so this is the head, and this is the, obviously that didn't work either. Let's see where the daily chart goes. Okay, this is, just keep in mind, this is left shoulder. Made a move all the way down. This was the support, and then up within the channel, took a retest, and now on a strong move up. This is a nice bull flag pattern right here, just to give you a little bit of a context. This is a nice, beautiful pattern. And then very strong move on Friday, continuing the move. Look at this. This is the only 1.5, over 1%. This is the only index that actually is strong enough to today. So look at the small cap. There seems to be a little bit of a rotation moving into the small caps. That might be something to watch for. Like I had said last week as well, there's a rotation going on from the mega cap, the Magnificent Seven, over to the small cap. So keep that in mind when you're going through this. Okay, one of the stocks that showed up on the radar today was Spotify. Spotify makes music services, so you can, everybody knows what Spotify is, so I'm not going to go to necessarily what they do. Most of you probably know it or probably use it or have subscribed to it. Let's go through our 5-step analysis really quick. I start always with the financials and from an income statement on an annualized basis, roughly about $3 billion, $3.2 billion 2016. 50% growth before that, slowing growth from the 40s, 20s to the teens. Oh, grow back again in 2021 because of COVID to nearly 30%. And then single digit growth. Oh, that's a big hit. And then 13 billion trailing 12 months. So it's grown from 3 billion to 12 billion, almost 4 times over the last 8 years. Strong growth. That's a good sign. Oh, this is not a very high gross margin situation. 30% gross margins and net margins in the negative 10% range, not even negative 5% range. So a little bit of a challenge. Margins are not great. That's probably because of the nature of Spotify's business, right? They have to pay their creators quite a bit. On a quarterly basis, what used to be a single digit growth over the last year is now back again to the teens. That's one of the reasons why it's showing up. Beautiful growth back in again last quarter. Q3 revenue growth 20%. They also cut 17% of their staff today, nearly 1,500 people. So they're going to boost bottom line. So 4 billion, 3.8 billion, almost $1 billion. So 25%, 25% is the gross margin. And they actually turned a profit. Look at that. That's beautiful. They turned a profit last quarter. Small profit, not a big profit. We're literally in the 1% range, but still positive sign overall. The company is roughly about $36 billion, doing about $40 billion, but the margins are very small. Right? So keep that in mind. Let's see if they have any debt. Just make sure that you check. Almost always, this is a challenge. So total assets about 7 billion. Non-current, let's keep it about 5 billion or so in total cash and assets, and about almost $2 billion in debt. Manageable, not great. Cash flow was an issue, but now seems to be okay. So they're throwing out cash flow about $200 million. Not a bad sign. Okay, now let's look at some of the metrics. Their price to, they don't have earnings, so there's no price to earnings. This is reasonable. For 18-19% growth they said last quarter, they can continue that up and to the right, plus they're cutting costs. That's a good sign. So you look at the gross margins in the 25-26% range, net margin is the 1% range, but with their cuts coming up, this should probably go up into the at least 2 to 3% range, I would think, or a little bit more. Closer to 5% is probably a decent sign, 5 to 7%. Just to give you context, but Netflix has their own content, so keep that in mind. It's not an apples to apples comparison, music versus television. Netflix has a lot of their own shows. Spotify doesn't have their own artists. They tried to make a big move into the podcasting area. I don't think that went very well for Spotify. But Netflix, if you look at it overall, their gross margins are in the 40% range. So compared to 26 for Spotify, 20% net margin. This is a beautiful business. But Spotify is probably going to be in the 5 to 10% range. Okay, so now that we know that, let's go back to Spotify. On the technical analysis now, did a little bit of a move up, stage 2, stage 4 decline, consolidation. This is a beautiful consolidation, stage 1. Stage 1 consolidation, stage 2 growth, stage 3, a little bit of a decline, stage 1 move, stage 2 move up again, and then a nice decline. Actually, you could call this a consolidation stage 3 phase, and then a decline. And then another good decline over here. This is building the base. For all practical purposes, this could be building the base. And since then, it's been steady and up and to the right. So where is it going on the long term? It is going on a stage 2 incline. This is rough. We're going to make it a little bit better on the weekly chart, but this is going up. Notice the slope. One of the things I wanted to share, every video I'll try and share something new. I always look for the slope of this channel. If the channel is sloped much higher and to the right, it means the stock is going to move much faster. This slope is very easy slope, about 10-20% or something per year. So that seems like a reason why is probably because they're not having as many margins. So their revenue, although might be going up, their margins don't seem to go up all that much. Okay, but adjusted a little bit better. This is in an uptrend, even on the weekly chart. Good move, very good move. I like it. So this had look at this. This was top, left, right, move all the way down. Nice base being built. Just to show you what that base looks like, this is a beautiful base. Not a very long base, not a very deep base, not like a base that I would be super thrilled with, but still a nice base being built, accumulation with low volume, and then very strong volume up, and then a consistent move up. This is another good day, a week, if you will. Volume moved up. So the next big resistance should be somewhere in this area, the 191. Oh, they've got past that 191. So it's probably going to be in the 216 range. There's quite a bit of resistance here. And the support for it definitely should be at least in the 118, 120 range. We'll move it up a little bit more when we go to the daily chart. So that's on the weekly chart. It's up and to the right slowly. Keep in mind that this is going to be a slow moving stock. Doesn't move up dramatically all that much. But today's move, 8% move, is a very strong move. Okay, so the reason also it's showing up 52-week high, it's closing in the 52-week high, moving up into the right in a very strong way, which is a good sign. And so I'm going to adjust the resistance and support a little bit. The resist support seems to be multiple touches here at the 145, maybe even a little bit better before it even gets to 145, the 160. Look at that, couple of touches here, 1, 2, 3 touches, and then another touch over here back in 2023 July. So 160 might be a good support and resistance over in the 216 range. The daily chart looks good. It's broken. This is the key part that is broken, just to give you a little bit of more visibility into that. Let's show you what that would look like. The reason why it's showing up very, very well also is because this was a key resistance zone that it's just blasted past. That's one of the reasons why. So this is definitely going up into the right in a good direction, along with today's announcement of cutting 17% of the headcount. That means bottom line is going to improve. I would expect this stock to do fairly well. Where is the next big stop? Wait for it to consolidate. It's not a great candle. On the daily chart, this is not a great candle. You would like to see a strong green candle like one of these candles. Can you see that? I want to see something like that. But in the meanwhile, this usually means it tried to go up. Well, today, remember, NASDAQ had a negative day. So it tried to go up, but the bears pushed it down and ended up a little bit higher, 193. But a good gap. Look at this gap. This is a strong gap. 180 to 190 is a good gap. This is almost a $13 gap that it actually had. So that's likely. It's not an earnings gap. This is related to the fact that they're cutting people. So I wouldn't be surprised if this gap closes. Wait for the next couple of days for this to form. Wait for the next couple of days for this to form. If it starts to head higher, keep in mind it's going to pull back a little bit. If it heads lower, keep in mind it could close this gap and then head to the right. This is not going to be a very fast moving stock. So just keep that in mind. If you want to keep it for a year or so, this is definitely going in the right direction. Safe stock will probably give you a decent return, but not one of those that's going to move dramatically quickly. Thank you very much for watching. Please, if you like the video, comment on the video, let me know what you think and share on Twitter so that other people find it as well.